Gold prices have been
Once again,
rising. Many saying if anything's like glittering over the past 2 weeks, it is gold prices and gold indeed. Now, why is this happening? We've been speaking to analysts and experts, and historically, why do gold prices rise? Now, indications of interest rate cuts, of course, the geopolitical tensions, and the fact that the precious metal is just always a safe haven in times of uncertainty. So, all of these factors and more perhaps is the reason why gold prices are seeing a consistent uptick. However, to decode this further and to answer your question sitting at home, that is it the right time to invest in gold, we're joined by two very special guests. We have Nasir Salim, a veteran market expert. We have senior business economist Santita Mukherjee. Thank you both for joining us and for helping us decode this uptick in gold prices. So, gold prices hitting a record high. All that is glittering at the moment is gold, many believe. Your thoughts first, what are the factors, and then we'll get to if it's the right time for the viewer or the consumer sitting at home to invest in gold.
thank you so much for having me here, Sakshi. Two points that I'd like to address straight off the bat is when you're saying that it's a safe haven to invest in gold, let's decode this further. It's a safe haven for whom? It's a safe haven for central bankers, not say ordinary citizens of India or anything like that. And I'm making it a little dramatic, but let me decode this further. Central banks invest into gold because it helps them hedge against inflation. In the developed markets, inflation is very high. In India, inflation is not so high in today's date. Why? Because a lot of physical assets have been created, which has helped with the supply chain in India. So we are actually not suffering from very high food inflation or otherwise inflation in general. Developed markets, inflation is very high because there are two wars ongoing. So central banks actually invest in gold to hedge against inflation, to hedge against geopolitical risk. How does that help us as investors? It does not. As an investor, we must understand when we invest in gold sitting in India, you're investing via INR, the Indian rupee, right? So you're immediately taking an open-ended currency risk because globally, gold is pegged to US dollars, right? You would not want to do that, for one. Secondly, in India, it's a growth economy, and that's a no-brainer. Everybody knows the growth and the development story that is unfolding in India. So if you're looking at wealth creation, if you're looking at growth assets, you'd much rather be in growth creating assets and not in an asset class such as gold, because gold is essentially used by people who are into very volatile trades, like a commodity trader, somebody of that nature who needs a little bit of stability. For somebody who's looking to participate in the India development growth story, you'd much rather be in growth creating assets and not in gold. For example, let me diversify this into a deep dive and take the layers of the onion. How do we do that? For example, when you invest in equity, right, you're investing in a fundamental business, right? You're participating in the growth story of India. When you invest in a bond or a fixed deposit, you have a cash flow coming out to you. A bond is a promise to pay, so you have a coupon interest. In gold, you have none of these, right? It is you're investing in gold only on the merit that it is in short supply on planet Earth. Hence, it's a safe haven. Again, a safe haven for whom? It's for central banks. But for an investor, you really make money. If you see 20-year track record, if you see 30-year track record, you actually don't, because gold also has periods of bear run, which investors do not monitor because there's no ticker,
Right,
right? In equity, you monitor.
right.
So, from my perspective, if you're sitting in a growth economy, it's absolutely a no-brainer. One needs to invest in growth-creating assets. Investing in gold, at best, you can look at sovereign gold bonds because that at least has a cash flow component to it. But investing in physical gold, keeping it in a locker, does not really is not productive at all, in my opinion.
Okay, Nasir Salim, do you agree? It's time to sort of look at gold, as a, when she's talking about the fact that look at other asset classes. Don't look at it from the lens of a central bank. Look at it from the lens of the consumer or the viewer sitting at home. So, do you agree that look, they can look at other assets, other asset classes to invest in? Firstly, do you agree with the factors? Do you believe those really are the factors why gold is surging at the moment? The prices are hitting a record high. Have been seeing a consistent uptick globally and in India? And where do you see investments? As to the viewer sitting at home and saying, look, is it time to invest in gold and the euphoria and the frenzy around gold prices that everyone is tracking? What do you have to say to them?
Thank you, Sakshi, so much, and great to be back with you and Sanchita. I think to your pertinent question, because we are now being we see a lot of FOMO happening, and even YOLO as far as the capital markets and asset classes are concerned. But I think coming back to the basics, and I'll spend about maybe just 45 seconds or a minute on this. See, gold, which is often sought as a safe store of value in times of economic turmoil, Sakshi, benefits from central banks easily as it pushes down bond yields. I mean, currently everyone that we hear of, all global economists and reports are suggesting an interest rate cut as far as the Fed is concerned, and the bet is say sometime in between June, May and June, right? Obviously, it's everyone's guessing a bet, and therefore, I think gold prices usually experience an uptick. And in addition to the Fed expected of rate cuts, I think there's also a lot of growing speculation that the US, will cut rates in June. In addition to that, there is a lot of number which is on lines of slowing down industrial production and construction spending in the US. Now, which is basically coupled with the decrease in inflationary pressures. Now, the point is that the moment we see this, along with geopolitical tension, which is what we've been seeing in the Middle East, there is enough belief that the sudden spike, of course, we've seen is because of Fed interest rate cuts in June, the probability of it coming in June, and therefore we see a certain uptake. But I must tell you, to your second part of the question, I think gold acts beautifully as a hedge in all portfolios. We have been, as Sanchita, my colleague, just said very favorably, that central banks have been buying gold. In 2023, the largest consumers were central banks globally. And I think, with all of these, points that I just discussed, geopolitical tension in the Middle East, Fed rate cuts expected to come in June, slowing industry and construction spending in the US, slowing, as I said, signs of those two. These will all have kind of helped fill up the rise in sudden surge in gold price. But as I said, as a hedge, it's a good strategy. But to your investors, more pertinent, I think more relevant from their perspective is, please buy in dips. You should have already been invested in gold, as a hedge. I'm assuming that your experts that you consult and the people that you seek inputs from may have already kind of allocated some portion in gold as an asset class for that hedge to work in beautifully. And in today's times, as far as India is concerned, buying in India, domestic gold may be not the best time to invest right away. Maybe we should wait for some dips. So our recommendation is, our shortlisted recommendation amongst others in asset classes is that you should look at gold as an asset class, surely, but not at the current times. We should be looking at it only in the next dip that you will possibly see.
Okay, so you say look at it, gold prices and investing in gold on dips. Sanchita says, one should consider sovereign gold bonds as opposed to the traditional format of investing in gold, if at all. That's what you both sort of somewhere agree on. But to those saying that, look, gold, offers returns for the long term, something that, even in our sleep, we will always invest in gold. Your thoughts, Sanchita, to those who believe that it will always generate returns and remains a long term bet.
So whilst I agree with Nasir in terms of a bit of diversification as a hedge against inflation, it has to be very, very minimal as a unproductive asset class, which a lot of people hold in India already. And that's a big problem for our country, because then the money does not go into more productive assets like equity, bonds, etc., which augur well for the government of India as well, for businesses and for the investors as well. Because there's always a very important aspect of investing in productive assets in a growing economy. You stand to benefit over the long run multifold, way better than gold. So again, a lot of investors who miss out because they see the absolute return. They would invest in a certain date and then go and sell it at a certain date, just like in real estate. And then they say, we made this absolute return. But if you really see the CAGR, or the compounded annual growth rate, it doesn't amount to much if you were to compare it with productive assets such as equity. Again, it's not a recommendation or advice that I'm giving, but it's just a comparison of asset classes in terms of general knowledge and commonsensical conversation. So gold over many periods of time actually have underperformed most asset classes in the world because they do not have any substantial story or any fundamental lying beneath it, except for the fact that it's a precious metal and it is short supply. So it makes a lot of sense for central banks to have it in their kitty because that hedges them against geopolitical risks, right? And gives them a leverage when they're dealing with other countries in terms of trade and all of that. As an investor, especially as an investor who's in India, which is an out and out development story and a growth economy, you should not be parking your money into unproductive asset classes. Rather, you should be diversifying across growth creating asset classes, which will give you a benefit of this entire economic story that is unfolding and will unfold in the next 10 years.
Right. Now, Sister Liam, your message to those who want to invest in gold, your message to them for the long run.
I think Sanchita has really clearly voiced out, a great point there. I think, it's always about risk and reward and risk-adjusted returns. I think, gold as an asset class should only be looked at as a hedge. There have been periods as high as 8 years where gold has given negative returns. As I said to you, I think the current scenario under which, gold can be considered is purely from a hedge perspective and also on the current reasons that are outlined, which is geopolitical tension as far as the Middle East is concerned, a safe haven, for as against dollar because interest rates are going to come down, and bond yields coming down in the US and dollar, and therefore that will have a positive impact on gold. So I think these are some of the factors that need to be looked at. But again, the pricing is very, very important. We always suggest to clients, it's obviously a suggestion, it's not an advice. I must caution you, it's obviously at your own risk, is that you buy high, you buy low and you sell high, right? As far as gold is concerned, right now we're at an all-time high of 65,000 rupees, as you can see in India at the moment. So therefore, it may not be the best time to buy in. Again, this is not advice. This is just, from a layman perspective, we like to tell you that you must consult and seek guidance from an expert. But buying in dips is something which is suggested. I think there is enough volatility. There are 32 countries going into elections this year. We will see a lot of volatility being brought in, geopolitical tension, a lot of action on the interest rate scenario, and I would suggest that a combination of ETFs, which is available through mutual funds with large asset managers in India, and the sovereign gold bonds, could be a strategic way, a tactical call in your portfolio, subject to your risk return and risk adjusted returns in your investor profile. And obviously, our suggestion is please seek guidance from an expert before investing.
All right. Thank you both so much for sharing your thoughts and your insights. And if you're sitting at home and wondering if it's the right time to invest in gold or not, well, we've had both of them answer these questions and more for you. Thank you.